What does the government budget deficit coming back mean for the banking sector? And it's a related question, and its ability to provide resources for the real sector. I'm going to ask a similar question about crowding out. Is there a crowding out of resources for the real sector, and what can be done that we're actually wrapping up to some of the questions raised by the National Bank, that it is difficult to instill liquidity in the market for multiple reasons?
Okay, before we get to this question, by the way, very good question, I would like to comment a little bit on the on budget deficit. Essentially, budget deficit for Ukraine can be just anything if you know where to spend it effectively, and if you know how to finance it, and you know how to secure the yield on the budget investment, which is more than the yield you have to pay to investors in the Ukrainian government debt. So, I was not surprised to see that most of us sees very low budget deficit as acceptable, and this is partly because we do not fully understand why the deficit should be bigger and how it's going to be spent and how effective these investments would be. On the side of FDI, I do have a strong impression that Ukraine still does not realize that it needs FDI. Yeah. Historically, we had absolutely no sizable FDI. Everything was more or less recurrent corruption flows coming from Cyprus. So very few international companies actually invested in Ukraine, and those companies which actually invested in Ukraine, they faced huge problems. Just this week we had an event in Ukrsibbank inviting essentially 80 to 90% of all FDI investors in Ukraine, multinational companies investing in Ukrainian economy. And the amount of problems, the number of problems they face is huge. So they lost a lot of money in Ukrainian banking sector. They lost assets in Crimea, in the Donbas area. So this is a very complicated story. They are not, of course, happy with the legislation, in particular the capital and currency controls. So it would be foolish to expect FDIs to be unfolding rapidly. In particular, provided the very slow well, there is some progress in structural reforms, but obviously insufficient to deliver on growth of the next year or 2 years, maybe on more long-term horizon, be more effective. So what Ukraine could do, so just as my colleague mentioned, so you have to implement the red carpet approach to foreign direct investors. You have to be more active. You have to be more informationally active. You have to communicate with government bodies. You have to do the showcases of privatization and advertise it globally. And finally, what you have to do, you have to unlock the land market, because essentially, when you look on the structure of Ukrainian economy, it's changed dramatically. So we now have two industries driving Ukrainian economy. It's agriculture and it's services. And services, by the way, is developing in the fantastic manner. Returning to your question on crowding out, there is no crowding out effect currently in the local market, simply because banks cannot find good customers to lend money, and this is one of the reasons Valeria Gontareva mentioned in her speech. So local businesses, they are quite leveraged. So they already took quite a lot of loans, and it would be silly to increase that amount. essentially, overall, the banking sector, what the banking sector does currently, we stockpile our liquidity into certificates of deposits of the national bank. So there could be absolutely no crowding out effect coming from Ministry of Finance being more active on domestic market. I would say it would be a year or two before this crowding out effect risk could appear in our situation, because the ratings of government debt are still quite low, and it's going to be some time before the remaining banks, and very few banks are left in the market, and those banks are today much more prudent than they were in the past. So government has to prove they are trustworthy, so the banks can invest in government debt instead of national bank, which provided very good reform track record. So it was fantastic achievement, in particular in monetary policy. So government has to repeat that, and then government can hope to attract financial resources, and then this crowding out effect can potentially appear.
Thank you. I would like to quickly look back to the question of FDIs. Some of the quite prominent reformers in Ukraine who are applauded by the outsiders and insiders excuse me, alike, might say the following to your argument about the importance of the FDI for Ukrainian economy. They'll say no one is going to come here because people have had a bad experience of being abused in multiple ways over the course of the 25 years. Or maybe not taking such a drastic perspective, but we can say these people will wait to see if those who accumulated wealth locally and moved it out of the country are confident enough to start bringing that wealth back. So let us wait first to see that not the large oligarchic groups, but smaller, still sufficiently rich people will start investing in their own country, and that would become a signal to us that it is safe to invest. What would be your answer to that argument?
Look, the first part is foreign direct investment is going to come to this country anyway. So the only, in particular, in this period of very fantastic low yields globally. So I don't see a scenario in which foreign direct investment will not come in this very competitive country in terms of wages, in terms of natural resources. So they will come, but they could come as a result of Ukrainian very famous policy of, and this policy is do nothing. So wait until the situation improves. Or it can be a result of more active policy, so that would unfold foreign direct investment quicker than in the first case. As for the rich people returning back in Ukraine, and wealthy individuals putting their money to work in Ukraine, yes, we observe the very intensive flows of money returning to Ukraine, but local businesses, they still see FX risks and non-transferability risks as too high. So the most popular product is to have your, let us say, $5 million stored in the Swiss bank. Then the Swiss bank would do the letter of credit for you, and then you would get a credit locally in a local bank on the safe basis in hryvnia, and then you can finance your business this way. This is absolutely the most popular product for corporate customers these days.
Thank you very much. Very interesting.